back to the Build a Trader YouTube channel. In this video, I'm going to be talking about supply and demand trading concepts. Using supply and demand in your trading can greatly transform the way you view the markets and transform your overall profitability when used correctly and in the correct context. I quickly want to point out that there are a lot of other ways that you can use supply and demand in your trading. However, I believe the way I use it and apply it to my charts is very unique compared to some of the other ways that I've seen and the other concepts that I've seen out there. Learning supply and demand and applying it to your charts and your trading is actually very simple. If you give me about 10 to 15 minutes of your time, stick around to the end of this video. By the end, you'll learn how to apply it to your own charts and transform your trading. Now, I'm gonna head to the charts. I'll see you guys there. Bat fam, here we are on the charts. Right now, we are looking at GBP JPY, or GJ for short. Okay, so a few quick things that you need to understand about supply and demand. One, supply is like resistance. They often line up with each other. And two, demand is like support. They often line up with each other as well. So right now, we're looking at the 2-hour time frame. I'm gonna go up just a tad at the 4-hour. And when I'm using these examples, I'm going to flip between my other chart that I have marked up on GJ, just to show the previous trades that I've taken that have worked out this week and last week, using the exact concepts I'm going to show you. So here we are. First, you're going to use the rectangle tool. Supply and demand is applied as zones, if you don't know that. But here we are, we're looking at the 4-hour right now. So we can see a few things. One, we're going to start with this current area right here, and I'm going to mark up this higher area as well afterwards. But first, we can see an area right here where I am marking this now. Now you may be wondering, why is this an area of supply? Okay, there's an area of resistance here, and the zone that's drawn is an area of supply for a few different reasons. If you go down to the lower time frame here, on the 1 hour, this zone was drawn on the 4-hour. On this 1 hour time frame, we have more details, and you can see in this zone is a lot of wick rejections, making this an area of strong supply. Okay, now you can apply supply and demand to many other parts of the chart, right? So for example, I just drew this one. But on the 1 hour time frame where these wicks are right here, where I'm drawing this zone now, could also be seen as an area of supply. But what happened? It broke through. Although this was resistance, it ultimately broke through. And there's a reason for that, because when you use supply and demand, certain supply and demand zones are stronger or more probable than other areas, which is why this zone right here did not successfully hold. There's a reaction, but ultimately it broke through bullish into this higher supply zone, which is more confirmed and has multiple wick rejections. This area is a lot stronger than this area down here, as well as this was the daily high. So when you're correlating time frames and using supply and demand, it's very helpful. And if you don't know how to correlate time frames, go ahead and watch my time frame correlation video. However, we're looking at this here. So this move right here in this area of supply, I'm going to delete this one. This area of supply here where this wick is, I actually entered on this trade at 514, 162.514. And how did I catch this short? I caught this right here, 514. Got a stop loss just above this wick on to the left, and I have my take profit right here, and my other take profit down here as well at this previous level that ultimately broke. But I caught this move, understanding that this zone is right here, understanding this was the daily high, and this was an area of rejection. On top of that, I noticed that the supply zone right here broke, meaning that a lot of times when these areas break and overextend, a lot of buyers try to jump in, a lot of impulse traders expecting an impulse move to go like this, how I'm trying this black arrow, a big bullish candle here, but they often get trapped in this move because the price reverses as such, making this a very strong area of supply. Another thing I'm going to draw next is an area of demand. So you can see the strong area of supply here. I'm going to draw a nice demand zone. Let me see if I can find one somewhere. Now right here, this would be a weak area of demand, similar to how this area of supply was weak. There's a reaction here. As you can see, it wicked off, but ultimately it went bearish. Okay, so this wasn't that strong of an area of demand, because ultimately this was a lower high, and after a lower high and a downtrend comes a lower low. But a strong area of demand would look like, let's see, so we can find one. This would be a good one right here. Although it's not in this area where I was first talking about, this is a good spot to illustrate strong area of demand. You can see at this point in time, the current market behavior was bullish. As you can see, it's making higher highs and higher lows. And if you don't see that, ultimately at this point in time, the direction was bullish. As you can see, this area of demand held, it wicked down, and ultimately shot up bullish and made a high, and then ultimately the market reversed. But this is an example of a strong area of demand. You can see multiple wick rejections here. You can see that the trend is bullish, and that this should ultimately be a higher low point if it is to continue bullish as such. I'm going to show you another example of supply here. And actually caught this move for the sell over here. This move was last week. This was the first drop last Friday that happened. And then what happened? This was the start of the week. We ultimately came up, pushed all the way back into it, and then we dropped again. And this has all been within this current week. It is only Thursday, or it's about to be Thursday. It's currently Wednesday right now here in Seattle. But you can see this area of supply right here. If I go down to a lower time frame, I can refine it. And if I go down to go up to a higher time frame, you can see with a little less details. A lot of these supply and demand zones are the extreme ends of these higher time frame candles, or at least the valid, the really strong supply and demand levels. They tend to line up with these wicks on the higher time frames. As you can see, this was the previous top of the previous 12-hour time frame, or the 12-hour candle, and then push back in. We can go down to the 3-hour. You can see it just covers the wick in this previous candle. But how I'm drawing them, I'm covering the top wicks of the candles, and then depending on how the candles are forming, I'll either cover the candle body or just the wicks themselves. Normally, the wicks themselves are better because of the more extreme ends, and that's how you can catch the wicks. Ultimately, a supply and demand zone, it can react in that zone, overshoot a little bit, or just tap it, or go right in the middle of it as such. But ultimately what happened, we had a pushback into the zone here, and it absolutely melted. A weak supply zone that I'm about to draw is right here. We can see that there's a push and a reaction off of this. Now, a lot of times when they're not valid, they still react because traders are seeing these zones and they're trading off them, right? So they're taking sells. Sellers are seeing this as a supply zone. They took a sell here, tapped in. They're like, okay, tapped into the supply zone, take sells, it's going down. But ultimately, price made a higher low. Your first clue would have been this wick right here, and then the next candle that failed to close bearish, close bullish, starting to create this higher low structure, then ultimately blasted through. For a supply and demand zone, a supply or demand zone to be strong or very valid, it would completely reject off the first try, like as such over here. Like I know it rejected strongly here, but that was your first clue that it was valid, but it ultimately didn't break through, right? It still respected this area of resistance and came down. You see here it tapped in, reacting the pushback in and broke through. Same with the example down here that I was showing. It reacted off, came down, then ultimately broke through. This time on this one, for this sell that I caught that I was talking about earlier, it tapped once and completely reversed off. That's what makes a supply and demand zone valid or invalid. Another area of demand that can be drawn from this current area that I'm seeing could be here. Although it's not in this current area, I'm trying to show you guys very good supply and demand zones. So I could draw some in here on the lower time frame, which actually I might, as in on the 30-minute and 15-minute. That's how you catch these smaller scalp trades. But first I'm going to show you some stronger ones on the higher time frame, because those are the ones you really want to focus on, ideally, because that's how you catch these bigger moves. But for some of these scalpers and intraday traders, I'll show you guys how to do that as well. But here's an area of demand. You can see the market is pushing really bullish. Came down, you can see lots of quick rejections. And you can see this early on before this even happens, where I have the yellow circle going for this price action, just based off the wicks. So if you draw this out and then you see it react again, you go, okay, keep dragging it, and understand this is a possible area of demand. If the market was moving in real time, that's what you'd be doing. And right now the market is moving in real time, so this supply zone, as such, is dragged over for that reason. Anyways, you can see here there was a strong reaction, multiple wick rejections, lots of sellers exhaustion, lots of rejections to the downside, lots of wicks, how we're seeing here, where it's failing to break. That's called seller's exhaustion. The sellers are failing to break. The sellers are getting tired. Buyers keep stepping in, keep pushing this up. Seller's exhaustion is your clue that it's not going down, and vice versa. Top wicks are called buyer's exhaustion. Buyers couldn't push it up anymore. Same concept. As you can see, this demand zone pushed and went higher. You can also draw another one right here. Same exact thing. Capture the wicks, part of the candle bodies, and boom, ultimately tap down and shot up. Same exact concepts. If I go down or go up to the 4 hour, see the same thing. If you want to capture just the wicks, look at that. Basically a perfect tap. And if you go to the lower time frame, you can refine these areas a little more. And yeah, it's a nice little area of demand. Now you could draw it like this, just capturing the wicks right here, but ultimately you would have missed this. Using the smaller time frame supply and demand concepts, which I'll actually show you right now. So although this wick didn't reach down here, like I said, if you were just capturing the wicks, if you go down to the 15-minute, which I am at now, you see all these little areas. This can be a little zone. If you were a scalper and intraday trader, this is how you do it. This little zone here. Boom, had a bullish push. Capture the full wick, tap down, pushed up. You can see it came down again. You can draw another zone right here. Boom. Let me adjust this. And remember how I said it can kind of overshoot it sometimes, or just barely miss it. In this example, it slightly overshot it, but it ultimately took off. Now you can use these areas of supply and demand on the lower time frame. So you can see this area of demand was respected. There's these lower time frame supply areas too, right here, that you can catch these counter trends or quick reactions off of it. You can see this area of supply right here. And what happened? Boom, reaction came down, ultimately pushed back up, reaction again came down. If you wanted to, you could drag it over here. Reaction came down before ultimately pushing up. But these areas are areas of reaction, and if you understand how the market moves using time frame correlation and market structure, and knowing how to apply these areas, you can catch lots of different short-term trades based off of this concept here. Understanding that, okay, it's going to hit this and comes up to this area, then likely the market may transition, come back down, make a higher low, and then from there make a higher high, and then come back down, make a higher low, so on and so forth. When you understand these concepts, you're able to take your trading to another level, in a sense. So instead of saying, okay, I'm going to trust my analysis, you enter on the lower time frame, you go, okay, we'll enter here and hold it to, whatever higher time frame level here, right? But if you understand these concepts that I'm showing here, you can actually catch a lot more movements, a lot more profits, and a lot more potential trades. But it depends on the market conditions. You can't always trade like this, because a lot of times when the bigger when the higher time frame move happens, a lot of volume comes in, and so you can't do that. It's just a straight movement to the downside or upside typically. Same with this push. So it depends on the market conditions that you're in. That's why you got to use really good risk management and understand what is supposed to happen in these areas, and accept that if it doesn't happen, then it's not valid, right? So I'm going to zoom out a little bit once more, and as you can see, these little areas that we've just drawn on the 15-minute, this is where they're at, where they line up on the 2-hour, and they don't really look that clean up here because they were applied on such a lower time frame. But that's how you use these supply and demand areas if you are a lower time frame intraday trader. But if you're trying to catch these bigger moves, these bigger breakout moves, and these big moves on the open, these concepts do not work. That's where you have to take into consideration these higher time frame zones and levels. And that's what really matters overall, is the overall higher time frame trend and the higher time frame levels. And I can actually show you guys on my other chart here. Yeah, this is the trade that I caught on Monday on the drop on the open. There's a move here. The market came all the way up. I was waiting for this. I understood this was an area of resistance where I'll have this black line. Also a previous area of structure, which was just the previous structural high. And on the other chart that I just showed you, this was a supply zone, which I'll just draw right here. Basically, 3 different things were telling me that this is a strong area for a sell. And essentially, that's how you should be trying to trade as well. If you want to learn more of my trading strategy, just watch my other YouTube videos. I explain each of these concepts in multiple different videos. But that's all I have for this one, guys, and I'm just going to go ahead and go to the outro now. I appreciate you guys sticking to the end of this video. I hope you guys learned a lot about supply and demand, and I hope you guys are eager to apply it to your own charts and your own trading. Don't forget to like this video and subscribe to the channel. Don't forget to follow the Instagrams at BuildATrader, at BatSignals. They're both in the description of this video, as well as the free Telegram channel and Discord community. Both of those links are in the description of this video. If you are interested in free analysis, free trading signals, and a community of like-minded individuals, go ahead and check them out. See you guys in the next one. Peace.